So first off, for the MicroStrategies, what's been interesting is, so the whole idea here, in case you've been under a rock and you haven't seen what's going on with MSTR, the stock has just been parabolic, but correlated with the US dollar, right? And the idea here is that they've turned this middling software company. I say middling, like I run a multi-million-dollar publicly traded company, but middling all the same. And the idea is that they were selling software, and recently their earnings, like I think they had like abysmal earnings even. And people have come to the conclusion, look, they're not a software company anymore. They're a treasury for Bitcoin, and they're doing this essentially this leverage play on Bitcoin. So before I go too deep into that, I do want to actually just play a couple of minutes of this clip of Michael Saylor on CNBC talking to I believe it's Andrew Sorkin about what MSTR is doing.
Bitcoin's been a wild run, and boy, have you been right. But I'd love for you to respond to this report.
Yeah, well, I think a lot of people don't understand our core business. We're a Bitcoin treasury company. We're powered by a Bitcoin Reactor. We've got $35 billion of Bitcoin, and it's spinning at 100 vol. So the way we make money is we're selling the volatility and recycling it back into Bitcoin. And we're also stripping the volatility and the risk and the performance off of fixed income securities. And we're transferring that to the common stock. So our common stock is delivering 2x Bitcoin, 2x vol. So Andrew, if you want to understand the economics of this, we generate a spread. The BTC spread we generate, it's a function of the equity premium, the convert premium, and the Bitcoin premium. The Bitcoin premium is the ARR of Bitcoin versus the US dollar. 2 weeks ago, we did 4.6 billion of an ATM. We ran it at a 70% spread. That means we made about a $3 billion BTC gain in 5 days. That would be about $12.50 a share. But over 10 years, that's $36 billion, or about $150 a share, just on that 1 week. This week we did a convertible bond, $3 billion at an 80% BTC spread. That's a $2.4 billion gain. That's about $10 a share, but over 10 years, that's $125 a share to the shareholders. I think that the thesis of the shorts is if the premium in the equity disappears, we can't make money. What they miss is that when we actually borrow money at 6% and we invest it in Bitcoin, and Bitcoin goes up 30%, and by the way, Bitcoin's going up 60%, we're getting a 90% BTC spread, but it would be 80% BTC spread, which means the $3 billion fixed income raise in preferreds or bonds generates the same $125 a share and $30 billion over 10 years. So once you understand that, you have a different view of the company.
So what do you say, though, to those who say there's a risk here? Because this is effectively a levered Bitcoin position. And if, in fact, Bitcoin goes down, this becomes a much more complicated situation.
Yeah, well, the number one risk you take is the existential risk that Bitcoin has an extinction level event and goes to zero immediately tomorrow. But every long investor in MicroStrategy is a Bitcoin maximalist or a Bitcoin believer. They've accepted that risk. Once you accept that risk, what do we expect? We expect it's going to go up 29% a year for the next 21 years. It's been going up 60% a year. So the people that are buying the equity are buying the equity because they want 2x Bitcoin, they want 2x vol. And once you accept that idea, you can see, over the last 2 weeks, Andrew, we've generated $5.4 billion in BTC gains. We're making $500 million a day. I'm staring at my screen and we're selling dollar bills for $3, sometimes a million times a minute. And so it's not impossible. I mean, we may very well be the most profitable company in the United States, growing the fastest right now, because there's not many companies that are making $500 million a day doing what they're doing. If you don't like Bitcoin.
All right. So tell me that this guy doesn't sound like a crypto founder.
I mean, 100%, especially if you take the stance of being a Bitcoin maximalist. It's a little unclear to me, though, how Saylor is taking their mark-to-market positions, or maybe said a different way, their unrealized positions on Bitcoin and accounting for that as being profitable. Towards the end there, he kind of lost me on how they're making money or posting a profit, because at least from an earnings perspective on what they report on their quarterly reports, those aren't recognized as earnings. So it gets really confusing because the company itself is unprofitable and doesn't even intend to be profitable. You weren't incorrect earlier by referring to them as a middling software company, because I don't even think they do much of the work that they used to do as a company. They're entirely focused on this Bitcoin strategy. So the mechanism that he's describing here sounds a lot to me like the types of leveraged positions that were taken even in the dot-com bubble, where effectively the companies were selling volatility in the same way by offering new bond issuances. I mean, we can go all the way back to like T. Boone Pickens in the oil sector in the 1980s and look at similar approaches to how they were raising capital in order to leverage debt in order to buy new land prospects and so on and so forth. It feels a little bit like that, but I feel like there's a bubble that always starts to crop up once you start using leverage in this way. I'd be very curious about how investors feel when Bitcoin inevitably has its next 60 to 75% drawdown, and whether they're still truly Bitcoin maximalists at that point. I'm sure, as you've probably been in Bitcoin as long as I have, which has been since 2012, 2013, always as a trader, never as a maximalist and as a long-term holder, although I seriously wish that I was more of a holder, obviously. The number of drawdowns we've experienced have always been massive. One of the first ones in Bitcoin was over 97%, and then it was 92, and then it was 85, and then it was 76, and 70%. And each time the drawdowns are getting a little less severe, but they're still extensive enough to where you're losing an enormous percentage of your current holdings until you wait for the next cycle to appear. And each time that cycle reappears, it's never as large as the previous cycle was. We're experiencing that now, where Bitcoin's year to date or even year over year performance isn't nearly as performant as it once was.
That's right. So that's why he does say a couple of things in this interview and other ones, trying to address some of these points, right? So the idea is that I think he says something like the performance of Bitcoin is like up 60% per year on average, but really they're calculating it at 29%. He said, I believe in an interview with Pat David on PBD, that even though they're borrowing at 0% or near 0%, I think it's something like 82 basis points that they're borrowing, that they could borrow up to 6%. And then still be able to not get margin called or anything on their loans. The bonds that they're issuing, I believe, are 10, 20-year bonds, something like that. So they're long dated. They don't have to worry about that. And it's a 0% coupon on the bond. 55% premium and a 0% coupon on the bond. So they don't even have to pay out more than what the money that they get in. So the idea here is that he says it's structured in such a way that Bitcoin could suffer a significant drawdown and that they would still be fine. In fact, during the drawdown that we had in the last cycle, where Bitcoin went from 69,000 to 17, we were all waiting for MSTR to explode, right? I don't know if you were following at the time. People are paying attention to like, if Bitcoin gets over here, we calculated that this is where they get liquidated and blah, blah, blah. And it didn't happen.
It didn't materialize. You are absolutely correct. They seemed to save their position during that period of time. Saylor was just as loud on Twitter as usual, and still a Bitcoin maximalist, of which I have to applaud him for that, for always staying consistent in this strategy. But I think we kind of ignored him up until recently. And then it was like, Bitcoin's on a rise again. Everyone's thinking, what's Saylor up to? What's going on over there?
Right. Here's what bothers me. What doesn't pass the sniff test? So I've been around con artists a lot my entire life. And he does two things in this interview, which he does in other interviews, where he says, he describes MicroStrategy as a Bitcoin nuclear reactor, right?
Okay.
Now, it's not a Bitcoin nuclear reactor. right? He's using that imagery, that physics industry imagery that a bunch of economists will use in markets to sort of like trick you into thinking there's laws that he's following here.
Mm.
And obviously, this is what's going to happen. We're taking Bitcoin, or we're leveraging it. We're spinning the volatility. He describes it as this mechanism, so that you think to yourself, "Oh well, if a nuclear reactor," which I also don't understand, if this is like that, and he understands it, then he must know that they're generating some sort of energy and power, which is what Bitcoin, what he says Bitcoin is. Okay, so that I just automatically I hear that from a salesman, and I go, "Okay, I'm being sold something here." Then he does the second thing where he talks about. Andrew Sorkin goes, well, what if Bitcoin has this massive drawdown? And he goes, well, if Bitcoin suffers an existential threat or existential collapse, then even then we would still be fine. So he does this thing where you think to yourself, well, I've heard the phrase existential threat, right? We've heard it all through this political season. We heard it all the time, existential threat. We have never actually ourselves in our lifetime faced an existential threat, like where it actually occurred. And so we sort of associate existential threat with a thing that could happen, and it lends wisdom to the person who uses the phrase that they're thinking about it.
Sure.
Right?
Which offers sort of a false sense of skepticism.
Right, exactly. So then we have to deal with this idea here of, what are the characteristics of a Ponzi scheme? So I'm just going to go over them just real quickly here. There's 5 characteristics that are generally talked about. One is a promise of high returns, which we do have here, a promise of high returns from Michael Saylor. The revenue model requires new money to pay for old money, right? Classic Ponzi scheme. Opaque operations, very unclear as to how all this is actually working. No tangible asset or value creation. There's a debate there as to, for once, in one sense, if Bitcoin itself can be considered what kind of asset it actually is, and more so what MicroStrategy is as a holding company for this thing we haven't even yet defined legally within the system. And then 5. Risk of collapse. And so even if you go, okay, that it's a financial instrument now, and that he's doing this sort of arbitrage, and that he's taking advantage of this period of time where there's regulatory, there's no clarity there. There's people who are buying the MSTR stock because they're part of an institution that can't buy Bitcoin, but they can buy a proxy for it. They are dealing with people who are there's a bunch of options being traded on the MicroStrategies because of the high volatility. You can get these large asymmetrical payoffs, so that's bringing more money in. There's reasons why people would want an instrument like this and use an instrument like this, not because they think for long term that it's actually be valuable, but that if you're at a company and you need to generate 15% return in the portfolio for this year, and you look at this, you go, well, I might as well do it, because if I don't, I'm going to lose my job. So I might as well buy it. I might as well take the risk. Other people are taking the risk as well. And so whenever I hear stuff like everything that he's saying, and when I take a look at the characteristics of what I've seen as a confidence game, I go, this is all really dependent on that, right? And there's 2 other things that stress me out when it comes to MSTR, which is why I never buy the stock. I never do anything with the stock. Is one, why on earth is Michael Saylor everywhere all the time, always pimping this MSTR stock? If you have a good product, you don't need to sell it this hard constantly all the time.
Yeah, okay, I'm with you on that. I think the vehicle that he's using is important to recognize because of the way that he's using his company as the leverage vehicle to buy more Bitcoin. And that requires this sales process that he's engaging in. The bigger question I end up having about the whole thing is, what role does Michael Saylor play in promoting the value of crypto from a price perspective overall? He effectively serves as a part of the echo chamber required in order to keep moving the price in a momentum upward direction, right?
Even more than the echo chamber, he's literally saying, give me money, I'm going to go buy Bitcoin and drive the price higher.
Exactly.
He's saying that.
Right. And given their holding right now being over 1% of all the Bitcoin in the world and that will ever exist.
1.2%. Yeah.
What exactly? Which is a huge percentage. I get it.
Right.
Like you're ultimately creating the very market that you're looking to profit from in the future. At what point does that game end is the question.
So that is the definition of infinite money glitch, right? We've heard this with SBF with the FTX collapse. We heard this with Luna. They go, well, we have the system, this basically foolproof system that relies as a basis on this asset that we know always goes up all the time. And so it's reliable, it's risk-free. We know it goes up all the time. And so if you build a system that's based on that, and you have this process, you can generate this infinite money glitch. And so the other thing that bothers me, other than him being everywhere all the time, very calmly and very confidently pressuring everyone to buy MSTR, he even talks in one of the interviews, I had a conversation with this person on the phone, and within 20 minutes, he gave me $500 million. Yeah, I've heard con artists say exactly the same sorts of things, all right? Very proud about the same sort of things, very casually. You don't see Elon Musk going from show to show to show saying you got to buy Tesla, that it's a good investment by Tesla. You don't hear Jeff Bezos going around going, you should buy Amazon stock when he was the CEO over there. You're not hearing any of this. This guy seems very adamant that we all buy MSTR while being super cash about it. super cash. Okay. But the other thing is forgive me, I forget the last point here I wanted to hit on. All right, that's enough as far as the number of things that are red flags for this. And so I want to stay away. The opaqueness of it, I understand how he's describing this idea of that this arbitrage is, that was the other thing. The arbitrage is seems to rely on there not being regulatory clarity within the crypto space, right? He's like, well, we're a vehicle that you can buy, you can own Bitcoin through. But once they clear that up, that's not going to take 20 years for them to clear up. And if it doesn't take 20 years for clear up, then where does the demand come for MSTR if you don't really need them as a treasury asset? I was listening today to somebody else on CNBC who it's a mortgage company, and what they're doing is that they're giving out mortgage loans, and they're allowing people so they give out a certain amount of money. You take that money, you pay down your entire mortgage. So now your mortgage is with them. They give you a little bit extra money in order to do renovations to your building or whatever to make it a little more valuable. And part of that loan money, they insist that you purchase Bitcoin with it. And that Bitcoin is held in escrow with the loan for a minimum of 4 years. So even if you pay off the loan before the 4 years, the Bitcoin is still there, and it's still sort of like a safety. It caps the downside for the company because they're also expecting Bitcoin to go up 29% per year, and they want to use Bitcoin as a way of protecting their downside, as opposed to having to claim the asset and sell it if the person defaults and all that. They don't want to have to deal with all that. They're like, we'll just deal with the Bitcoin asset. Well, more and more of these types of innovations are happening where people are using cryptocurrency or Bitcoin specifically as this asset in order to cover the downside. But what you're not seeing anyone else doing is what he's doing, Saylor's doing. Mm-hmm. Why aren't we seeing 5 other companies like MicroStrategy doing that?
I mean, if anybody else was doing it, I would be more interested in their convertible bonds if the company was more interesting than MicroStrategy's. One of the things that concerns me is why would anybody want to purchase a convertible bond for the right to hold access to their Bitcoin strategy and exercise their ability to convert that bond into equity ownership into MicroStrategy if their entire business is built and predicated on Bitcoin ownership and not income generation? Like, I understand there's these, potential dividend or interest payout process in the form of a bond, but I would not want to be holding MicroStrategy shares at the end if it's not actually a profitable and thriving business. And it seems like AI has come to really crush their entire offering. I'm not sure where they're going in the future.
That's right. So that, to me, I don't know if it's a Ponzi scheme. I don't know if it's a scam, but it certainly smells like it. When someone is selling something that's it's supposed to be high risk, but they sell it and they're saying that it's low risk. That's where I have problems. I'm nervous.
If it quacks like a duck.
Exactly.